Welcome back. This is Accounting 2, looking at Chapter 10. In Chapter 10, we're going to move forward with our sales journal, our cash receipts journal, and our sales return and allowance transactions. This is Accounting 2, so we are a corporation, so we've sold stock to get ourselves up and running. A little bit different owner's equity accounts there. This is also making a product. So back in Chapter 9, we dealt with the acquiring of raw materials in a purchase journal. Purchases is a cost type account where we will track the raw materials coming into our business. We also dealt with a cash payment journal. We're a big enough company now that we need multiple people to journalize special kind of transactions or only certain kinds of transactions. And we dealt with our same kind of, hey, old school, bought supplies on account type transaction. Or what if we bought stuff we didn't want and we sent that stuff back? So that's what we did with Chapter 9. We're moving on with Chapter 10. We have sales. Well, we didn't always pay cash for the raw materials we got. We purchased stuff on account. What if we sell stuff to our customers on account? Okay, so we're going to look at that transaction. We're going to look at cash receipts, money coming in. How are we handling that? Whether that's received cash on account from prior sales, whether that is received cash from cash and credit card sales. And again, we're going to sell things, but not everybody is going to buy or take every single thing that we have. So what if they send it back? So if you would, please and thank you, open up your textbook, page 268, taking a look at our objectives. Starting out with 1, define accounting terms related to a sales and cash receipts for a merchandising business. Identify accounting concepts and practices related to sales and cash receipts for a merchandising business. Journalize sales on account using a sales journal. Journalize cash receipts using a cash receipt journal. Recording sales returns and allowances in that general journal. We got our key terms there. We'll let you read those on your own. I need you to jump forward to page 270. New account. We're going to take a look at something called sales tax. Not every state has sales tax. In Minnesota, we're at about 6.5% on our sales tax, not on every single item sold, but that tax is getting collected by the company and eventually sent to the government. For us, it'd be Minnesota Department of Revenue. And that happens whether we do a cash sale or we do a charge sale. So sales tax payable, new account, it is just like any other kind of payable. Right now we know of accounts payable. Accounts payable is on the right side of the accounting equation, so it increases on the right side of the T account or the credit side of the T account. All of these things that say payable at the end are going to be liabilities, so they're all going to be the same. Right side of the accounting equation increasing on the right side of the T account. Jump forward, if you would, please, and thank you, to page 272. We're going to take a look at our sales journal. This is our company selling whatever product we have on account. We're not getting paid that day. Now, we're old school 1950s paper pencil world. We have the ability to get these blank pieces of paper and write up whatever we want in whatever column we want. The textbook company chooses to go with this route. The textbook company put our account receivables first, I'd put our sales second, and then put our sales tax payable third. Now, to me, that kind of seems counterintuitive. When I think of it, I would sell stuff, I would figure out what my tax owed on that is, and then in turn, I'd say, well, how much was my cash sale or how much was my account receivable going to be? So personally, I wouldn't necessarily do them in this order. I would probably do my sales in my first column, my sales tax in my second column, and my accounts receivable in my third column. That's just me, though. Similar to what we did in Chapter 1, we're going to deal with just one line per transaction. So we're going to deal with the date. We're going to deal with the source document. We're going to deal with who are we selling on account to, or who particularly is the account receivables. And then we deal with our amounts, right? Our set amount of sales, the tax that was collected in that situation, and in turn, what does the account receivable turn out to be? Sales plus sales tax is going to equal my account receivable. As I take a look on page 272, it's got a company called Village Crafts, and similar to a purchase invoice, it has, how much people are acquiring, how much are we selling to them. I'm selling them 6 of those, 8 of those, 12 of those, what the unit price is. We'll get to that eventually in QuickBooks. You look at your total amount of sales, multiply that by your tax rate. Textbook is using 6% as their tax rate. And the total amount between the sale and the sales tax ends up being our account receivable. So you take a look at page 273. Here is our first transaction. November 3rd, sold merchandise on account to a company called Village Crafts, $540. Plus the sales tax of $32.40. My total amount, or my account receivable, is $572.40. Sales invoice number 76. So we're going to do that transaction here. Again, when? November 3rd. Who? Village Crafts. What is the proof that it happened? Sales invoice number 76. First number I'm going to get is my sale number of $540. Second number I'm going to get is my sales tax of $32.40. Third number is going to be my total amount owed, or my account receivable, of $572.40. I jump forward to page 274. Here is my sales journal. You're going to notice that a few of my transactions are not collecting sales tax. You run into nonprofits like a school, or Mr. Ring is doing the blood drive through the American Red Cross, some companies like that. You may not have sales tax being charged. With that in mind, let's go ahead and do our work together on 10-1. So I'm on page 275 in the textbook. It says the sales journal for a company called Distinctive Appliances, given in the working papers. Instructor will guide you through the following examples. Using the current year, we are on page 9 of the sales journal. So over here on the right, I got page 9 of my sales journal. Again, this is Jackson's journal. This is what he's in charge of. September 1 of 2019. Sold merchandise on account to a guy named Adrian Mikowski, $800, $48 in tax. Total account receivable is $848. Sales invoice $104. The date is September 1. Adrian Mikowski is the account receivable label, because again, we're going to sell to more than one person on account or one company on account. Invoice is $104. $800 sale. Here's probably going to be the thing we got to concentrate on. The number they give you first is the sale number, which is the middle column number. $48 in tax. $848 is going to be my transaction. That's the account receivable. Next up, on the 11th. Sold merchandise on account to Columbus City Schools, $875. They are tax exempt, so we cannot charge them sales tax or don't need to collect sales tax, however you want to look at it. So again, we already got the month, we already got the year, so I just need my date on the 11th. Who is it from? Columbus City Schools. Sales invoice number 105. $875 for my sale. $875 for my accounts receivable. Last up, on the 28th, sold merchandise on account to a company called Swift Delight. Total amount of sale was $1,460. My sales tax was $87.60. My total amount was $1,547.60. If this was all I had for this journal, I would go ahead and total it at the bottom. September's got 30 days, so I would plug in the last day and I would plug in total. From there, draw a nice clean line underneath and total up each of my numbers. My debit amount there should equal the combination of my two credits. Go ahead and take a minute as you look for those numbers, and I will pull up what I have for an answer. Here we go. Totals, $3,270.60 were the total account receivables. I have $3,135 in sales and $130 some in sales tax. We are going to break each of these up into their own individual sets. So this was our sales journal. Next video coming back is going to deal with our cash receipts journal.